Welcome to another episode of the Financially Free Dentist podcast. I am your host, Jake Courtney, and I have a member of our SLP Wealth team that's also on our dental planning team, Kathleen Boyd, here with me. Hey, Kathleen, how
Hey,
you
everyone.
doing?
Good. How are you, Jake?
I'm doing well, doing well. You ready to nerd out about employment and the employment relationships that are available for associate dentists out there?
Absolutely.
Oh
I
man, I
am
cannot
ready.
wait. So since we're talking about employment, we work with so many different types of or dentists that are in different types of employment relationships with one practice, multiple practices, so it's really a great thing for us to see basically a sample of a variety of employment relationships out there. And so what I wanted to talk about first is our first jobs, right? So everybody thinks about, man, when I really, when I really had a car and I needed to pay for gas money, where was my first job that I was paid a very low minimum wage or something like that? So tell me a little about your first job.
Yeah, my first job, I was a little bit of a late bloomer. I was 19 years old, and I was slinging burgers at an upscale diner in my neighborhood, earning 3.25 an hour.
Oh, man. So did you come home from work every day, every night, and smelling like burger grease?
Yes, I did. The upside was though we got free lunches, so we got like free burgers and malt shakes, and that was nice. But
Yeah.
the job in and of itself sucked for sure.
Uh, well, it does teach you, like, I guess, work ethic, right? I guess from a young age,
It
but
did,
yeah,
and I've got a lot of respect for food service
yeah.
workers. Absolutely.
I've always heard you should at least work one job in food service just so you can
Mhm.
see what it's like on the other side of the kitchen
Yeah,
or the table there, right? So,
exactly.
so my first job was at an arcade, mini golf kind of, you know, ball pit area called Magic Castle in Ohio. And I was a game attendant there. And what a game attendant is when arcade games had tickets that actually spit out, and people would take this big ball of tickets and weigh them, and you'd get your prize at the counter there. I would be the one to go around and fix the ticket jams in each of these machines. So now every single arcade, at least most every arcade I've been to in the past 5 or 10 years, has cards that you swipe, and it's kind of like all
Yeah,
digital and electronic, right?
yeah,
But we think about an inefficient system is the whole
yeah.
ticketing system that always needed repairs, like in terms of fixing jams. And I just remember, like, on Saturday mornings, the place would be absolutely packed, with kids crawling around and parents, yelling at me for, getting their um, not getting their tickets for their kids and all
Mhm.
that. And I would be sweating, and it was a tough job, believe it or not.
Yeah.
But I did get to play Papa Shot whenever I wanted, which is the basketball
Nice.
game.
Love that game.
We'll go one on one for sure.
Okay, sounds
So
good. I'm gonna pick you up on that.
awesome. Let's just start with just breaking down what the difference is between
Yeah.
1099 and W-2.
Yeah, and this is a great topic, Jake, because it's very highly relevant. I work with a lot of associate dentists, and they come to me with job offers. And they're like, hey, this employer is giving me a decision, a choice, whether to be a 1099 employee or a W-2 employee. And whenever I hear the phrase 1099 employee, to me, that's a red flag because there's no such thing as a 1099 employee. They're two different things. So if you're a 1099, that refers to Form 1099, the form that you file when you're working as an independent contractor for a business, corporation, nonprofit. And what that means is for tax purposes, you are self-employed. Okay, so you don't get a paycheck per se, and the employer is not withholding taxes. You're basically getting paid, and it is your responsibility to withhold the taxes. It is your responsibility to save for retirement. But it offers a lot of flexibility in that if you're self-employed, you should be able to do what you want. You should be able to set the hours you work, what days you want to work, how much you want to work, and such. You know, good example, rideshare drivers are typically 1099s. A lot of the physicians, some dentists that do locum tenens work or 1099s. That's different from being a W-2 employee. W-2 refers to the form that employees file when they're filing their taxes, they're reporting their income for tax purposes. When you are a W-2, that means you are a traditional employee. You're going to have taxes withheld from your paycheck, either semi-annually or biweekly, however frequently you get paid. Oftentimes, you're getting paid benefits as well, like health insurance, disability insurance, and such. The employer is also responsible for paying part of your payroll taxes, like your Social Security and Medicare. And then there's just a lot more you have access to in terms of rights, right? As a W-2 employee, you can't be discriminated against. If you are, there are penalties for that employer if that's something you can prove. So very different classifications, yeah, and how they
Yeah.
work.
So there's a lot to think about there in terms
Hmm.
of if someone is offered two different positions and one's 1099 versus W-2. And also it depends on the state, right? And we had kind of talked about this before we started recording the pod, but you're in a state
Exactly.
that, well, you're from a state, you're no longer in the state right now, but
Mhm.
you're from a state that is very much pro-labor, of a strict hand when it comes to the 1099 relationship. So tell me a little about that.
When the associates come to me and they're saying, this employer is giving me a choice to become either a 1099 or a W-2, it's not really a choice. It's a decision that's already been made for you through your state legislature. So every state creates laws as it pertains to how independent contractors are defined. And typically, what I do with associates is I will look up the law in their state to see how they define independent contractor. Here in California, that is very strict. Any of the California dentists out there listening to this podcast may be familiar with a law called AB5. It was very controversial during the pandemic, and it stemmed from rideshare drivers who were arguing that they should be classified as employees, not independent contractors. And under the AB5 law, again, the laws are going to be different in each state, but here in California specifically, it is a three-prong approach to define who is an independent contractor and who is not. That first prong is the company does not or cannot control or direct what the worker does. So they can't control how many hours you work, what days a week you work. If they do, you're an employee. The second prong is the worker performs tasks outside of the hiring entity's usual course of business, which is interesting, especially as it relates to dentists. So if you're a dentist performing dentistry in a dental practice, you are performing the work that is within that hiring entity's usual course of business. So technically, you can't be classified as an independent contractor under California law.
So, like
However,
for example, if you're a practice owner and you hire a marketing consultant as a 1099
mhm,
contractor, that
mhm,
is not the core business of
correct.
a dental practice. It's not considered an employment relationship under California law.
And that leads into the third prong is the worker is engaged in an independently established trade, occupation, or business like marketing, for example. That would be a good one, or
Okay.
a CPA or something like that.
To think about this in other terms, if it walks like a duck, quacks like a duck, it's got to be a duck, right? You're an employer, an
Yeah.
employee, if they kind of control most of what you do in the core
Mhm,
business of the practice,
mhm,
and especially in a state like California.
mhm,
So that makes a ton of sense. So from the employer side of things, it's pretty cut and dry in terms of what you can and can't do based on labor laws. Of
mhm.
course, this is not legal advice, right? So definitely, if you're a practice owner, or if you're an associate and you feel like you should be one or the other based on, just our little bit of based on our just glimpse of what was the name of the law you mentioned for California?
AB5, AB5.
AB5. Just based on our glimpse of
Mhm.
AB5, then you should definitely reach out to a labor law attorney
Yeah,
in your respective state.
exactly. I highly recommend. Yeah, we can't give you legal advice, and the law is gonna be different in each
Mhm.
state. So definitely recommend conferring with a labor law attorney if you have any questions. But again, the commonalities we're seeing in each state is that sense of control.
Mhm.
will the employer be controlling any aspects of your work?
Mhm.
That's the question you should be asking yourself if this decision ever comes up for you.
Let's just say hypothetically, an associate is offered two positions. One is W-2 and one is 1099. So we mentioned a couple of pros and cons already, but let's kind of dive into this list here. Let's talk about the W-2 side of things, right? One of the biggest pros to being a W-2 employee is that when you're paid, your employer is mandated to pay for one half of what's called FICA tax or
Yeah.
payroll tax, right? So everybody has this pay stub when they're a W-2 employee on a frequent basis, biweekly, monthly, semi-monthly, whatever it might be. And then there's pesky little line item called FICA. And you're like, why in the world is FICA taking so much money from my paycheck?
Mhm.
And in reality, if you're 1099, that number would be double typically for the first, I
Correct.
think it's about 100, maybe $170,000 of income. And then FICA is no longer, well, Social Security is no longer um, taxed
Correct.
on income above that number. But
Mhm.
that's besides the point. But that's one of the big benefits is that technically there's tax savings if you're a
Mhm.
W-2 employee because the employer is responsible for that FICA or half of that
Mhm.
FICA line item. So that's a big benefit. So do you remember what the percent on that FICA is typically?
15.4% total. So that
Yeah,
includes the employer's half.
that's a great point. So if you're offered, just to keep it simple, $100,000 at both of these positions,
Yeah.
technically you're making $7,000 more as a W-2 employee after the
Mhm.
FICA taxes, right? Because the employer is
Correct.
covering that. So that could be a big benefit, especially if you're making a lot of income. And then the other kind of pro to W-2 is that um, benefits. We don't really see a whole lot of benefits offered through dental practices, really, anyway, do we?
No, we don't. You may see retirement plan offering here or there, but other than
Yeah.
that, not a lot.
I want to say just in general, I think you have to have at least 50 employees to be mandated to offer a cafeteria plan, like a health insurance plan, and most practices are below that number. So
Correct.
that's why we don't really see a lot of health insurance out there, even though we fully endorse offering health insurance to
Yes.
employees out there, right? Because we know how expensive health insurance on the marketplace plans can be, which we're going to get to as a 1099. But you're right. 401k is pretty much the only benefit we see a lot, and even then, it's not really that common as much as we like to see that. This pro to is employment law protections, right? So we know
Mhm.
OSHA is a big employment,
Mhm.
protection, right? So safety and hazards in the workplace, right? So if you're an employee, you're protected by OSHA and workers' comp, right? So that's a big thing too if you get hurt on the job, because
Mhm.
you are literally an employee, and so you have these protections in place.
Depending on the state you live in, unemployment insurance. I know here in California, the employer is required to pay into the UI state fund. And so that is to protect, workers if they're unfairly terminated or whatever. It provides that safety net. And, all of this, Jake, it really points to the importance of understanding labor laws in your state. Understanding labor law is a good part of good financial planning. It's not something that's taught in our CFP books, but it's related. It influences everything from retirement savings, social security, disability, these social safety nets. And that's why this is such an impactful decision, because if you go the independent contractor route, you lose all those benefits and you're responsible.
And that's an excellent point. Excellent point, especially if you're in a position like dentistry that, a lot of, relationships can be broken, you know,
Mhm.
injuries can happen, all of these things can happen, versus our positions that are sitting at a computer. It's definitely something to be aware of without a doubt.
Yeah,
We mentioned this already, but taxes are a big, obviously, this is a financially free dentist podcast. And so we do want to talk about the money aspect of this, right? So
absolutely.
taxes withheld, like that's a big thing that I see for people that are W-2 and then all of a sudden find a new position that's 1099 and they're like,
Mhm.
wait, what do you mean I have to pay quarterly taxes?
Yeah, exactly. So again, when you're 1099, you're considered self-employed for tax purposes. So you are responsible for paying the federal, state, FICA taxes, everything. However, if you're a high income earner, this is where being 1099 could be valuable, especially in California, where you're a high tax state. Because you get to write off a lot of things associated with the work you do, as opposed to a W-2 employee, you cannot. So that can help you reduce your tax liability.
Hmm.
Also, with the FICA taxes, as a self-employed individual, you get to claim half of that. Typically happens when you file your tax return. So you have to wait till the following year to do
Hmm.
that. But that's still a great benefit of being a 1099.
Yeah. When you say claim, do you mean like you get to deduct half of
Yes,
the self-employed tax? Yeah. Yeah, that's
exactly.
great. So it's not as big of a blow as a direct
Mhm.
7.6% hit on your gross income, right? So
Yeah.
that's good there. One thing that I see all the time, in the scenario that I just mentioned about changing practices and all of a sudden you're a 1099 contractor, um, is the quarterly tax payments that you have to
Mhm.
make. So like think about the payroll, the paycheck that you receive has a formula that determines how much they withhold from your paycheck. You fill
Mhm.
out a W-4 when you're a W-2 employee,
Yeah.
and it says, "Hey, I have this many dependents. I'm married or I'm single, and I want to withhold an extra X number of dollars every paycheck," right? So that kind of informs that calculation for them.
Mhm.
As you mentioned, Kathleen, when you're 1099, you don't have any withholding, right? And so you fill out
Mhm.
what's called a Form W-9 that basically just says, hey, pay all of your invoices, because these are technically invoices to me as a contractor, pay it to this entity, right? And you literally provide a tax ID number and all that. But there's no taxes withheld. And so as you're thinking about what withholding taxes, you have to do that manually pretty much every quarter. For January through March, it
Mhm.
is June 15th for the next 3 months,
Yeah.
September 15th, and then for some reason, it's January 15th for the next 3 months. But those are the primary dates you have to be concerned about as a 1099 associate, because you technically are a business owner and you're not getting
Mhm.
taxes withheld from your payments. And so you need to make those quarterly payments, or else you get hit with a tax penalty if you under withhold or underpay
Yeah.
taxes throughout the year. But if you're converting from a W-2 to a 1099 associate position.
And that's often a question I get from associates is, how much should I be setting aside for taxes?
Mhm.
Uh, so rule of thumb, I typically tell them to just set aside about a third of your pay into an account dedicated for taxes. But ideally, you want to be working with a CPA
Mhm.
to help you get a good grip on, what is your estimated tax liability going to be.
And that's a really, really good point, because it's too often we work with folks that have a CPA that meet with them once a year and file
Hmm.
their taxes, and they say, "Oh, by the way, you owe this much." And
Yeah.
you can not owe that much by contributing X amount to a SEP IRA, right? At the
Right.
end of the year. Good tax planning
Right.
is meeting with someone throughout the year, which is that's what we do in our tax service at SLP Wealth.
Hmm.
Hey, so far you're projected to make this much, or tweak your quarterly tax payments to make or to withhold or pay an X dollar amount for the rest of the year, and therefore you won't, you'll be
Hmm.
on track to not owe anything come, April of next year. And so you're not
Yeah.
hit with this big surprise tax bill that we too often have clients come to us and say like, oh, by the way, in April, I'm gonna have to owe $20,000 of taxes and I have $30,000 of cash.
And that's common, unfortunately, with a lot of CPAs and tax professionals is they're more transactional.
Hmm.
They're about helping you file your tax return by April 15th, and that's it.
Yeah.
But like Jake pointed out, you really want to be working with a professional that's going to be working with you on an ongoing basis throughout the year, being proactive, helping
Hmm.
you identify opportunities to reduce your tax liability throughout the year. That's what we do over here at SLP.
I love our tax team because they are on it. They meet with clients
Yeah.
throughout the year. But not to get too off on a tangent about, tax advice and tax preparation that we see. Do you have an example of a few business deductions that we tend to see that maybe a 1099 associate can typically deduct without offering tax advice? This is not tax advice, but just generally things that, maybe associates already pay for. that they might be able
Mhm.
to deduct if they're 1099 versus W-2.
Yeah, you may be able to deduct things like, gas costs to drive to the office you work at. You may be able to potentially deduct, partial lease payments on a vehicle you're paying for.
Continuing
Those are some
education, that's a big one,
continue.
especially if you're aiming to do special procedures, like
Hmm.
implant courses, all of these things, right? So those cost, tens of thousands of dollars a lot of times. And so that could be a major tax benefit to be able to deduct that from your income versus as a W-2, and you're not getting that reimbursed. You can't really deduct that as a W-2
Yeah.
employee.
And one of the biggest benefits, in my opinion, is you have access to special retirement savings vehicles that W-2 employees don't have. So accounts like the SEP IRA and solo 401k, where, you can contribute up to, I think it's $69,000 now
Mhm.
in either one of those accounts. And that can be huge, not only just for retirement savings purposes, but for student loan purposes as well. These are accounts that can help you dramatically reduce your AGI. And if you're on an income-driven repayment plan, keep your monthly payment incredibly low.
Speaking of student loan payments are based off of adjusted gross income. And if you're a business owner, believe it or not, it's still based off of adjusted gross income. It still kind of flows into your personal tax return, your Form 1040. And so
Mhm.
all those business deductions do reduce your adjusted gross income, right? And so that's going to
Yeah.
be a key piece. So thinking about this, if
Mhm.
we're very strategic about student loans for dentists, and we have like a middle of the year income recertification date,
Mhm.
and we have a big CE course that we have to pay for, theoretically, you could time up that CE payment to make sure it's kind of lumped. We talk about lumping charitable contributions, right, into one tax year in, December and January to just kind of shift it all to January. Kind of the same
Mhm.
thing for business owners, 1099 associates for CE. They could kind of lump it into one tax return and make sure that they, file an extension, or just kind of time up that tax return to make sure that that one tax return that they lumped a lot of CE into to be used for student loans to lower their AGI.
Yeah, absolutely. Or even doing alternative income documentation.
Mhm.
If you have one month where you had a lot more expenses than the other,
Mhm.
and that's producing lower income than the tax return, that gives you the flexibility to use current documentation as opposed to old
Yep.
documentation.
So, um, and then kind of capping off the list here, um, you know, we hear in dentistry all the time, non-solicit, non-compete, like when sign an associate agreement and then you want to buy a practice and the practice can't be within a certain number of miles of, the
Mhm.
existing practice. I think just in general, and maybe you can speak more to this, but just in general, 1099 associates will have way less restrictions when it comes to those sort of contractual agreements than a W-2 employee
I believe so,
associate,
because
right?
you're not an employee. So again, an employer cannot tell you what to do, what you can or cannot do, right?
Yeah. Especially in a
Um,
state like California.
Yeah, and in
Yeah.
California anyway, non-competes are illegal. So if you
Yeah.
are a W-2 associate, that's a red flag if an
Yeah.
employer makes you sign one.
So yeah,
Yeah,
definitely look at your contract and if you're in California and just make sure that that language is not in there because that'd be a
yeah.
major red flag for sure. So, and then just kind of other things that like we think about when we're kind of planning for associates, health insurance is very costly if you're 1099.
Mhm.
Oftentimes the only option is to go through the ACA marketplace, aka some folks call it Obamacare, right? Because President
Mhm.
Obama, he was in office when the law passed to create the ACA plan marketplace. It can be very costly, and most associate dentists don't qualify for any health insurance subsidies. And
Right.
so you're pretty much paying the full sticker price. It depends on the state and it depends on the zip code you're in and all these kind of factors here. But just in general, it's a lot more costly than employer sponsored health insurance. At least you're part of the premium. And then once you actually get coverage, oftentimes it's not great, like in terms of out of pocket maxes, and then
Mhm.
just what you're responsible for if you do actually get care. So
Yeah.
that's something else to consider there if the W-2 position you're being offered does have health insurance. Most
Mhm.
DSOs, for example, will have health insurance, but private practices that offer W-2 or that have W-2 associates tend to not really have a lot of health insurance options
Mhm.
unless they're big enough, you know.
Right. So you're
So,
probably looking at ACA or state exchange options anyway.
right. Yeah.
Yeah. I will say though, on the independent contractor side, the benefit of it is you get to deduct those
Yeah.
premiums, your monthly premiums as a business expense.
Yeah. And if you're a W-2
Yeah.
associate and you have to do the ACA plan, you don't, right? Because you're not a
Hmm.
business owner at that point.
Right.
So that's a major benefit to 1099 if you're going to be paying for it anyway, right?
Yeah, exactly.
So yeah. And then lastly, buying a house. So we talk about business deductions. We talk about solo 401k contributions that reduce technically your net self-employment income. Um, when you're a business owner, it is for some reason much, much harder to qualify for a mortgage than a W-2 employee.
Hmm.
I think just lenders in general think of, your W-2 income as kind of like your stable, ability to pay your mortgage. And so they view that as kind of much more favorably to when they want to qualify you for a mortgage. So just be careful about how much you deduct from your gross income because when you go and apply for a house or for a mortgage, and let's say that's on your kind of goal timeline there, um, you don't want to deduct away all of your net self-employment income to not show any income or not enough to be able to qualify for the mortgage that you want, even though your cash flow
Hmm.
might be saying something otherwise. So,
Such a great point.
yeah.
Yes.
So, so yeah. We went through the pros and cons. We talked about Kathleen, you were flipping burgers at a diner, and I was, sprinting around a game room floor as a ticket attendant. But now look at us, right? Now we've made it. We're with SLP Wealth here, and we're doing podcasts for dentists here. So,
Exactly. It's
um,
like that Drake song, started from the bottom. Now we're
yeah, now
here.
you're able to be a digital nomad, which is amazing, an amazing lifestyle, right? You see so many different places. And you got to start somewhere, right? So,
Yeah.
so if you're an associate and you're kind of offered, two different positions, one's W-2 and one's 1099, these are some things to think about here. Know your labor laws of the state that you're in is probably number one. And then run the numbers, right? So think about like, okay, does my spouse have health insurance? Does the practice have a 401k? Does the practice offer health insurance? Am I going to have a lot of CE that I can deduct? All of these things you should definitely think about as you're kind of processing that decision. And don't just make it based on the gross income you're making or production-based bonuses or production-based comp that you're offered in the contract. And maybe we'll do a part two next time for the practice owner side of it, whether
Yeah.
1099 versus W, for those that actually have the
Huge
choice.
implications, huge
Yeah.
implications for practice owners.
But yeah, thanks for joining me, Kathleen. It's been a pleasure.
Thank you so much for having me.
All right. See you next time.
If you have questions about what we covered in the episode, you can schedule an onboarding meeting with a planner on the SLP Wealth dental team at slpwealth.com/book. This podcast is for informational and educational purposes only and should not be considered individualized financial advice. If a specific investment is mentioned, it should not be considered a recommendation or endorsement to buy or sell the investment. You are encouraged to seek the advice of a financial professional before implementing any investment strategies discussed. All investments involve risk. Past performance does not guarantee future results.